All right, so on the Money Show, we make sure that we just don't talk about investing in mutual fund, but also help you meet the brains behind these funds. Now, in this week's Meet Your Fund Manager segment, we have on board Trideep Bhattacharya, CIO Equities Edelweiss Mutual Fund. He's the fund manager of Edelweiss Midcap Fund also. So let's welcome him on board and take this discussion forward. Trideep, good evening and welcome to the show once again, where today the fund in focus is Edelweiss Midcap Fund. Talking about the themes, okay, I think CapEx, consumer discretionaries, and China plus one. Is that the theme for your mid-cap fund that you are trying to follow? And how would you like to decode this theme in terms of returns for the investors?
First of all, good evening, Kavita, and thanks for having me on your show, on your wonderfully successful show. I'd actually point to 5 themes, of which, in the mid-cap, 2 of these themes actually lend to mid-cap as a segment quite well. Let us start with those 2. I would say that, indigenization of defense is one theme that I have been positive on and have been sort of playing this theme through the mid-cap fund overall. Given the paucity of listed names, particularly in the large-cap arena, mid and small-cap as a segment lends itself quite well to this theme overall. I think it's a 10-year theme, of which we are probably somewhere in the first 2 to 3 years standpoint. The second, as you pointed out, China plus one, and if I were to combine with government initiatives, I would say the EMS space is the other segment that we are, other theme which we are quite positive on. We think that from 5 to 10 year perspective, there's a meaningful runway ahead of us, and companies are just about getting listed. And hence, it kind of augments quite well for the mid-cap segment. We have meaningful bets in them, but these are the 2 themes of the 5 which lends themselves very well to the mid-cap segment, and we are overweight on these 2. Apart from these 2, of course, there are the other 3 are basically the CapEx theme, which you talked about, the rise of private sector CapEx, the lending financials. We think that this is a good place to be from a couple of years standpoint for lending financials overall. And third, real estate. We think that the real estate as a segment is probably in the first 2 to 3 years of 5 to 7 year upcycle. So in total, this fund is bullish on 5 themes overall, of which 2 lend itself actually particularly well to the mid-cap segment.
All right, and Trideep, based on these themes, the sector in focus from what we can see is banks, industrial products, finance, healthcare, and electrical equipment. The exposure in these top 5 sectors are how high as compared to the benchmark?
So basically, the majority of the portfolio is oriented around these 5 themes. If you were to kind of look at it, I would probably say somewhere around 70 to 85% of the portfolio is oriented around these 5 themes that we talked about overall. We think that as a combination of valuations and earnings growth, these 5 themes present a very good opportunity from a wealth creation standpoint.
Are valuations really high in the mid-cap space, or you think that we will see a little more run-up now for a few more quarters? What is your analysis?
My sense is that overall, if you were to look at mid-cap as a segment, by and large, the segment hasn't gone anywhere from a 1.5 year perspective, 1.5, 2 year perspective, like the market. But at the same time, particularly in the mid-cap space, if you look at the earnings growth of the companies, they hover anywhere between 20 to 35%, if not more. So the valuations today is a lot more palatable than they were about a year or so ago. Is the first point that I would make. Second, in my opinion, some of the drivers that we talked about in the form of these themes, these 5 themes that we kind of discussed, are medium-term themes and are earnings drivers. So as the economy takes shape over the next 3-5 years, these themes play out and these earnings drivers play out. India would be in a cyclical upturn. So the best way to play the cyclical upturn in any economy is to basically play in the mid and small cap segment. And that's why we have been recommending the mid-cap fund over a period of time, or particularly of late, as we see that we are getting closer to the cyclical upturn than earlier. So to answer your question, yes, valuations today are reasonable as compared to a year or so ago. We still don't think there is irrational exuberance in the market, and we think that earnings estimates are actually still surprising on the positive, which makes us feel that the segment is still good to invest.
Are you sitting on cash levels, on high cash levels? What's the current status on that?
So we don't take a cash call at Edelweiss Mutual Fund, but even if I were to, I would not be kind of high on cash, because we think that overall the earnings momentum remains fairly strong, fairly broad based, and in such conditions, when I can deploy money profitably across a market cap segment, why hold the money in cash? So we are not sitting on cash overall. We are almost 97 to 98% deployed as we speak.
Trideep, going ahead now, obviously, a lot of triggers you might get from the numbers which are coming up, but then going ahead for maybe the last few quarters of this year, how do you see the trajectory of mid-cap space changing in terms of sectors? Few bets where you might want to decrease your exposure going ahead, or you just want to wait and watch right now and just stick to the current strategy that's been adopted?
Great question. So I would say that incrementally speaking, if I were to regress my memory for what we have done over the last 3-4 quarters, I would say we were meaningfully underweight IT services in our portfolio about 3 or 4 quarters ago. As we speak, we are neutral. So overall, clearly there we have incrementally added, we have put some money to work. We have also historically been very negative on the consumer side. We still continue to be underweight consumer, but our underweight has come down to a certain extent. And the final bit that I would mention is pharma. We will kind of stay put where it is. So net, our portfolio positioning is oriented around overweight manufacturing, underweight consumption, overweight domestic cyclicals or domestic sectors, underweight global oriented sectors. By and large, that positioning is not changing. The only thing that has changed over the last 3 or 4 quarters is probably kind of on IT services, where we were meaningfully underweight. We are probably now more neutral in nature, not yet overweight, but mostly neutral in nature.
Trideep, talking about the mid-cap space, I really want you to help our investors or viewers also understand the kind of trajectory it has had in last 5 years, and also considering the time where investors might be seeing good returns in their funds. Maybe it is a time for them to book some profit or invest more. What will be your explanation basis these questions?
Yeah. So my sense is that if you look at the last 5 years, what the economy has gone through, we have gone through a period of structural reforms and a three sigma event like that of COVID. During these times, basically mid cap as a segment is generally kind of subdued. As we came out of these circumstances, we have seen a meaningful rally in mid caps, which is where we are speaking as we speak. Now, mid caps generally tend to do well when the macro circumstances are a little more stable. If the macro conditions are volatile, then generally flexi caps or large caps as a category tend to do better. If I look at today, the macros in the form of interest rates are probably stable to going downwards. Inflation is probably stable to marginally down. And this, I would say, is incrementally as a stable macro as opposed to what we have dealt with over the last year or so. So in terms of the time for my mid-cap investing, I think we are better positioned from the macro standpoint. With regards to valuations, I think in general, the markets have been Indian markets have gone through a good bit of time correction over the last 12 to 15 months. Yes, of course, there's a lot of rejoice around markets hitting all-time high. But another way to look at it is that over the last 12 to 15 months, markets haven't gone anywhere. So, net, while at the same time earnings have moved up, markets have remained favorable. Markets have remained kind of, plateaued, so to speak. So given all these circumstances, the best way, and given the fact that the stocks have rallied, particularly in the last 3 to 6 months, The strategy that we are telling investors is to invest in tranches rather than invest in lump sum. From here till the year end, if one can kind of think about doing an STP, that's one way to take exposure without getting sandwiched by the volatility that we see interim. But as a segment, mid and small cap, from a medium term standpoint, for investors with 5 to 10 year outlook, we are actually quite positive. We think that the next 4 or 5 years, Indian economy will go through a bit of a structural upturn, and a good way to play that cyclical upturn is to have decent exposure to the mid cap segment. Also, the mid cap segment is in many ways is naturally alpha, in the sense that the mid cap is a successful small cap and an aspiring large cap, if you were to think about it in that way. So you're not taking undue execution risk in the form of small cap space. At the same time, you're capturing the better part of growth rates as they aspire to become a large cap over a period of time. So it kind of sits quite nicely between risk and return, and hence for investors with a medium-term outlook, in getting exposed to this segment is something that I think investors should do. The way they should go about it is in STP, given the recent run, rather than in lump sum, is how I would summarize our thoughts in the way of going about investing.
Last question to you. Do you see more upside in the market, or you feel it's already peaked out?
I think the markets at the moment, on average, is fair value. We are not. I am not calling for caution, as in, are we seeing irrational exuberance all across? No. Are we seeing extremely undervalued stocks? No. So the markets are kind of fair value-ish. In this, I think a good way, or the way we are kind of looking about investing, is using stock picking or bottom-up stock picking as a primary driver for alpha, rather than relying on thematic calls or, in a sense, macro calls. So we think that in a fair value market, we need to find those pockets of value, and those pockets of value are kind of oriented around the 5 themes that we talked about. But bottom-up company-specific drivers is what would drive stock-specific returns and alpha, rather than kind of broad market levels, is what I would say. Markets on average would have maybe single-digit upside in the very near term. But if we get the stock selection right, we could see meaningful amount of upside over a period of time. Medium term, we continue to be constructive on India.
All right, Trideep, thank you so much for taking our time and explaining all the aspects of Edelweiss Midcap Fund and also the integrities involved in the market movement. Thank you so much.
My pleasure.
On that note, let's take a quick break, and post that, let's get your ICC ODI Cricket World Cup trip planned. We'll be joined by our guest, where we'll not only help you save money, but then also help you make your bookings. I'll be joined by Sankalp Agrawal, co-founder, CEO, Travel Triangle, and Feroz Aziz, Deputy CEO, Anudati Private Wealth Management, after this break.